Okay, I move to the next segment of the analysis, which is on NAV part. What is NAV is like for a share, we have something called as a share price. For a mutual fund, we have NAV, net asset value. In a share, we have number of shares. In mutual fund, we have number of units. And NAV was extensively used earlier in the calculation when I did NAV 1 minus NAV 0. But how was that NAV calculated is the second segment of the chapter. There are two ways in which NAV can be calculated depending on the information given. One question they will give asset and liability details. Another approach is asset and liability details are not given. If asset and liability details are given, value every asset at its fair value and value every liability, value every asset, value every liability. No concept of book value and all. Fair value. What is fair value? Whatever is the share price, whatever is the debenture price, you will have to value every asset and every liability. Market value of assets minus value of liabilities divided by number of units. Value of liability divided by number of units. Formula 2 is, in case you do not give me the details of asset and liability, I'll only say opening net worth is so much. What is opening net worth is? Opening units into opening NAV of the mutual fund, This will go up, net worth will go up if there is an income, net worth will go up if there is a capital gain, net worth will go up if somebody is coming into the mutual fund by giving extra money, and net worth will go down if somebody is going out, I'm having a loss, I'm having some expenses, net worth will go down. So add items which are increasing the net worth and deduct items which are reducing the net worth, divide by opening units plus the new units issued minus the closing units. So two approaches. One approach is value every asset, value every liability, value every asset and value every liability. Can I follow valuation of every asset and liability? Yes, if you give me the details of asset and liability. If you do not give me the details of asset and liability, I will go ahead and do very simple thing. Opening net worth, add items which are increasing net worth. What are the items which can increase net worth? It is there in the concept book in detail. Here only summary is there. What are the items which can increase? Any income, any capital gain, any inflow of money, all this will increase my net worth. What can decrease it? Any expenses, dividends paid by the mutual fund, anywhere outflow of money is there. Inflow of money added, outflow of money deducted, divide by opening units, add extra units, deduct the units redeemed, and you will calculate the NAV. Second thing is impact of events on NAV. What is impact of events on NAVs? Some events will happen, and because of which what will happen to the NAV of the mutual fund. First event is there is some purchase or redemption. If this happens, NAV per unit does not change. NAV per unit does not change. If you come into the mutual fund, you are added to the numerator as well as to the denominator. You are added to the numerator as well as to the denominator. And if you are moving out, you are removed from the denominator and you are removed from the numerator. NAV will remain same if a person comes into the mutual fund or if a person exits the mutual fund. Then when will NAV change? NAV will change. You got in money. I purchased shares and those shares appreciated, depreciated. That can lead to change in NAV. That can lead to change in NAV. Because you came in, I bought some extra share and their price went up, price went down. That can lead to what? Change in NAV. NAV cannot change just because a mutual fund is bringing in an extra person, and it cannot go down just because a person is going out. Second part, dividend declaration. Moment dividend is declared by the mutual fund, it forms part of my liabilities. It forms part of my liability, and the formula is asset minus liability. NAV will go down. NAV will go down. After declaring, I paid it out also. Now it is not in the liability, but asset has gone down. Asset has gone down because cash balance will go down. Cash balance will go down. So dividend declaration, NAV will go down. Payment, no impact. On the payment time, no impact because on the declaration itself, it will go out. So question says dividend declared, NAV went down. Dividend paid, NAV went down. Declared now, paid later, NAV went down. NAV will go down moment dividend is declared because it either adds to your liability side or is a deduction from your asset side because cash balance will go down or accrued dividends will go up. Clear? Any doubts on this? So anywhere there is a dividend declaration, NAV will fall by the amount of dividend. NAV will fall by the amount of dividend. In fact, it is also said that share price will fall by the amount of dividend when a cum dividend share becomes a ex dividend. But there, market side, some movement up and down can happen. But in mutual fund, no market side. So you do valuation. When you do valuation, NAV will exactly fall by the amount of dividend. NAV will exactly fall by the amount of dividend. Clear? Any doubts on this? Next, total yield of investor. This is asked in one exam question by ICA. What is total yield of investor? Is one mutual fund investor invest in MFA, MFB, MFC. For A, you can separately calculate return, which is 4%. B, you can separately calculate 8%. C, separately calculate 5. You cannot say 4 plus 8 plus 5. Percentages cannot be added. Then what I do? In A, I earn 20,000 rupees. In B, I earn 10,000 rupees. In C, I earn 5,000. Add all this. Divide by all amount invested. Divided by all amount invested. Total yield is applicable when I invest in multiple MF, capital gain of all mutual fund, dividend of all mutual fund, investment of all mutual fund into 100. Some can be profit, some can be loss also, but add up everything, not percentages. Percentages can never be added. You can never add percentage. You can add only what? The absolute rupee amount. Absolute rupee amount. Add up everything and then calculate the return. Clear? Any doubts in this? Able to understand till this? Let's see question now. Let's come to 13. On 1st April 2009, ABCMF has the following assets and prices. Has the following asset and prices. This is question 14 in the other book. At 4 p.m. Shares, number of shares and market price. A limited, B, C, D, E, number of units. NAV of the fund. Mr. X sends a check of 50 lakh and the fund manager purchases 18,000. What will be the question? Calculate the new NAV. Calculate the new NAV if the market price is as follows. So, three requirements. First is original NAV. Second is one guy is coming in. What is the NAV? Third situation, prices are changing. Prices are changing. What is the NAV? First situation, we will do it together. Second, third, I'll do it only in Excel. So, let's start. Computation of NAV. Computation of NAV, particulars calculation amount. Market value of assets. Market value of assets. First, I'll note down the assets, then I'll note down the liabilities, and automatically we'll get to the answer. There are, I think, 5 assets we have invested in: A limited, B limited, C, D, and E. So let's write them. Shares of A limited, 10,000 into, very self-explanatory. I'm not doing major explanation here. 19.7. Shares of B limited, 50,000 into 482.6. Shares of C limited, 10,000 into 264.4. You can keep writing it along with me. Shares of D limited, 1 lakh into 674.9. Shares of E limited, 30,000 into 25.9. All assets we have noted down. Any liability given in the question? No. we just put a total of the assets, no liability, net assets, divide by number of units, divide by number of units. Total assets, number of units, total asset and all you can copy from the screen. Totaling and all I don't want to spend time. So totaling and all you copy paste. Calculation, understand, I want you to write. When I'm saying certain question only I tell you I want you to write. Some question I say not to write. So this, when I say I want you to write, you have to practice. 952, number of units, 8 lakh, divide NAV per unit is 119.0475. Part 2 and 3 listen mode. Part 2 and 3 is in the listen mode. I don't want you to spend time because you will not get the crux of what I want to explain if you noting down things. Any doubts here? Clear? This is original NAV. Then a person gave a check of 50 lakh rupees. Gave a check of 50 lakh rupees and the fund manager purchased 18,000 shares of C Limited. He purchased 18,000 shares of C Limited. So C Limited from 10,000 will go up to 28,000. And the I got 50 lakh rupees for buying 18,000 shares. I assume whatever price is given, the closing price. I have paid 18,000 into 264. Some 47 lakh rupee goes. Balance cash will be there. Balance cash will be there. I purchase 18,000 shares. 18,000 into 264.4 is my assumption. Whatever price is given in the part 1 table. Then there is a rework where the prices change, NAV will change. So in the rework, same C Limited, not 10,000 share, it will become 28,000 share. 10,000 will become 28,000 share. Copy paste, copy paste. Cash is 50 lakh minus 18,000 into 264.4. 18,000 into 264.4. So this will be the cash balance left over. Sorry. 2,40,800 and total asset went up by 50 lakh rupees exactly. Total asset went up by 50 lakh rupee exactly. Number of units from 8 lakh will go up to what? 8 lakh? Okay, it's a common mistake which students make. I don't know why that mistake comes. They think that 18,000 will get added to the units. Where is the link between shares and units? Zero link. Understand this very clearly. Zero link between shares and units. I did not say units is total of all of this. When I did not say units is total of all of this, what makes you to think 8 lakh will become 8 lakh 18? And this mistake half of the students make. 8 lakh, they think I will add 18,000 in the number of units. It has zero linkage. What is the number of units? 50 lakh divided by the NAV you calculated, because you have to allot him so many extra units. 50 lakh divided by what is the NAV we calculated? 100 and so when you are coming into the mutual fund, it is not that Mr. X is the owner of 18,000 shares. Nothing to do with that. You gave 50 lakh. When you gave 50 lakh, he bought whatever he wanted. He bought whatever he wanted. He went ahead and bought. This is a very common mistake which students make. They add 8 lakh plus 18,000. 8 lakh plus 18,000. Zero link between number of shares and number of units. There is zero link. There are MF which do not invest in shares. They invest in bonds. That time you cannot say I'll add the number of bonds. There are MF which invest in property. Then you cannot say that I'll add the area square feet. So zero link between that. So units from 8 lakh will go up by another 42,000. 8 lakh will go up by another 42,000. I wanted to explain this. That's why I didn't want you to write, because you're writing, you'll only focus on writing things. So this is a common mistake which students make. Very common mistake. They add 18,000 to the number of units. Zero link. Again, I'm repeating, there is zero link. So 8 lakh will become, and NAV will remain same if you do calculation 119.0475. You get some number of more, that's more of rounding off. That's more of rounding off. Otherwise, NAV cannot change just because a person came in. Just because a person came in. Now when is the NAV going to change? In the next situation where you are changing 19.7, you are changing 482, you are changing 264, you are changing 674, you are changing 25, NAV will change because underlying assets underwent a change. Underlying assets underwent a change. Clear? Any doubts on this? Now, I'm not doing the rework, but in the rework, another mistake which students make, for cash calculation, they subtract the revised price. You cannot subtract the revised price. Shares are already purchased. Shares are already purchased, and my cash is 2,40,800. Just because C limited price goes up, you cannot say my cash balance will go down. This is another mistake which students make. They end up deducting for rework. They will say, I will do 290.8, 18,000 into 290.8. All that will not happen because it's already purchased. Shares are already purchased by us. After that, share price go up, share price go down. My number of shares cannot change. My number of shares cannot change. Clear? Any two common mistakes. One mistake is number of units. Second mistake is cash adjustment, which they do. Both are wrong. Both are wrong. Number of units is not adding number of share. Is not adding number of share. Then what should I add? Add the extra units allotted. What is extra units allotted? 50 lakh divided by the NAV which you calculated. What is the cash balance? Will remain same. Don't change it. Now what will happen? The rework part I'm not doing it, but you change all the value. NAV changes to 122. NAV changes to 122. Clear? Any doubts on this? Can you proceed? Done. Able to get the clarity? Understand very clearly. Zero link between the number of units and number of shares. Zero link means zero link. Don't confuse yourself and keep saying that 8 lakh I will add 18,000 share. Zero link, because you can invest in anything. You could have given me the money, I could have kept it idle also. I could have kept that 15 lakh as 50 lakh cash also. Then you cannot say that 8 lakh will not go up. 8 lakh has to go up. 8 lakh has to go up. I can use the money. I can keep it idle. I can repay someone else. I can do anything I want to do. Now, point is very simple. If a person has come in, he will be allotted units at the NAV. Any doubts here? Clear? Can we proceed? Let's come to 14. Mr. Sinha has invested in 3 mutual fund scheme as per details given below. We will do it together, but only one scheme I will do. Scheme X. I'm not going to read scheme Y or scheme Z. Date of investment, amount of investment, NAV at entry date, dividend received up to 31/3/2011, NAV at 31/3/2011. You are required to compute the effective yield on per annum basis in respect of each of the 3 scheme. Provide a brief comment. Provide a brief comment on the course of the action. I think one line got missed. Take 1 year as 365 days. Days calculation is needed here because date of investment is there. They would have done days calculation. That line got missed, I think. Take 1 year as 365 days. So I have to do calculation for scheme X. We will do it together. Scheme X, we will do it together. Y and Z does not matter. The same calculation. Here, I invested 5 lakh rupee. At the entry date, it is 10.5. I'll get the opening units. I'll get the opening units. Dividend received is there. Closing NAV is there. I'll get capital gain. Dividend plus the capital gain divided by amount invested into 100 is holding period return into 12 by M. Into 12 by M, if you do, that will give you the annualized return. The question has asked for effective yield on per annum basis. On per annum basis. So we will end up calculating the annualized return. Can I do IRR? I would have done IRR if below the table they had given those 2-3 values. I would have done IRR also. I would have ended up doing IRR approach. If below the table they had given those 2-3 values, we would have done IRR approach. Otherwise, let's do only the normal approach, which is 12 by M. Let's start. Computation of return of scheme X. Of scheme X. Particulars calculation amount. Formula remains same. What I get back minus what I give divided by what I gave into 12 by M into 100. Here it is 365 by number of days. 365 by number of days. Point number 1, amount invested. Amount invested. What's the amount invested? 5 lakh. NAV at entry date. NAV at entry date. 10.5 units allotted, units allotted, 2 decimal, 47619.05. Clear? Maturity value 47619.05. What is the closing NAV? Multiply with 10.4. 495,238.12. The difference here is the capital loss. The difference is the capital loss. Along with the dividend is my final income. Along with the dividend is my final income. I invested at 10.5. On the last day it is at 10.4. There is a capital loss here. There is a capital loss. Point number 5, capital loss. 4,000 rupees we are losing. 4761. Capital loss 4761.88. Point number 6, dividend income. How much is dividend income? Return in rupees. Capital loss plus dividend income. Capital loss will be subtracted, dividend income will be added. Return in rupees. 4738. This number is technically your numerator. What I get back minus what I gave. What I get back minus what I gave divided by what I gave into 365 by number of days into 100. 365 by number of days into 100. Last annual return 4738 divided by 5 lakh into 365 was the date of investment. Ignore 1st December in the calculation. 30 days of December, 31 days of January, 28 days of Feb, and 31 days of March. Ignore the 1st December and consider the days in the calculation. ICI may deviate also. ICI may deviate also. I am assuming that it is invested at the end of the day. So 1st December is ignored. Tell me the number of days. 30, 120. Okay. 365 by 120. 30 days of December, 31 days of January, 28 days of February, and 31 days of March. .88%. Instead of doing this, I could have done very simply 12 by 4 months. 12 by 4 months. Answer wouldn't have deviated that much. I would have. How many months are there? Sorry. Yeah. 2.84 I would have got, and there we got 2.88. So that's why I feel months calculation is okay, but exam requirement, I have to do days calculation wherever date of investment is available, and normally less than 1 year calculation we do this. They are also not very, I cannot say confidently ICI will do this question. I think that line got missed. Take 1 year is equal to 365 days. Clear? Any doubts on this? Okay, like this I calculated for all the three. First one is 2.88, which we did. Second one is 10.25. Third one is negative 24.33. Brief comment on the course of action he should take for future period. Very simple. Assuming past will repeat in future, sell the first mutual fund, sell the last mutual fund, and put all money in the second mutual fund. Sell the first one, sell the last one, and put entire money in MF2. Put entire money in the second mutual fund, assuming past will continue in future. That is, first gave 2.88, sell it. Last gave negative 24, sell it, and put all money in the second MF 10.25. Clear? Any doubts on this? Now, lot of variants of this question have come in exam. One exam ICAI said dividend yield. Dividend, instead of giving the number, they said dividend yield. If they give dividend yield, please multiply with your amount of investment. Multiply with your amount of investment. If it's dividend rate, multiply with face value of the investment. Multiply with the face value of the investment. What is face value? Number of units into 10 rupees. Number of units into 10 rupees. Whereas dividend yield, multiply with the amount invested. I think in the latest or latest to latest MTP, they did this. They said dividend yield rather than giving dividend rate. They said dividend yield, and they said I will not give you dividend received. You do the calculation. So multiple variants are there in exam as far as this question is concerned. Okay, almost similar question. Okay, dividend yield is there. Okay, this question it is there. Almost similar question, but some changes. Mr. Y has invested in 3 mutual fund as per the following detail. Again, we'll focus only on MFX. Only on MFX. Amount of invested 2 lakh. NAV at the time of purchase 10. Dividend yield up to 31/3/2022. Dividend yield up to 31/3/2022. NAV as on 31/3/2022. Annualized yield is 9.733 percentage. Assume 1 year is 365 days. Mr. Y has misplaced the documents of his investment. Help him in finding the date of his original investment after ascertaining the following. Let's do one by one for the first mutual fund. Let's do one by one for the first mutual fund. Right. Number of units is equal to first MF. Number of units is equal to number of units is equal to what by what? 2 lakh divided by 10. I repeat MFX, it's over. Once I do one mutual fund, it is the same thing for other mutual fund. 2 lakh by 10, 20,000. Value as on 31/3, 20,000 into 20,000 into, I should multiply with what? Into 10.5. Now, holding period, I'm going to use that concept. I don't remember the concept number, but I said somewhere 9.733 is equal to 365 days. Question mark is equal to how many days? Some logic we were doing. So that we are going to do here. 9.733 is annualized return. Let's get the holding period return. For holding period return, no need to do 12 by M. No need to do 12 by M. Holding period return is equal to maturity value minus amount invested. This is the capital gain plus dividend. Technically, what I get back minus what I give. Maturity value minus amount invested plus dividend. Dividend yield means on your investment. Dividend rate means on face value. Dividend divided by amount invested into 100. Into 100. Maturity value we have calculated 2,10,000. Amount invested 2 lakh. What is the dividend they have given? 3% on your investment. 3% on your investment. Dividend yield is on the investment made. Dividend rate is on the face value. Dividend rate is on the face value. In this case, both are same. I think 10 rupees, but okay. Still, it is to be computed only on your yield. Is to be computed. The yield part computation is on the amount invested. 2 lakh into 3%. Whole divided by 2 lakh into 100. Okay, so her point is this dividend yield, should I add it in the maturity value? It all depends on whether it's a payout or reinvestment. Reinvestment means it would have added to your value. Payout means you would have got back the money. You would have invested somewhere else. I don't know where you have invested. So it depends on, in MCQ if they ask, depends on what is there in the data. But normally what I've done is what will be done into 10.5, closing units into 10.5. Tell me the value here. What is the percentage? Now logic is very simple. 9.733 is equal to 365 days. No formula, nothing. 8% is equal to question mark. 9.733 is equal to 365 days. 8% equal to question mark. 300 days, and unfortunately you have to then do reverse calculation from March 31, deduct 31 days of March, 28 days of Feb, 31 days, and come to the date of investment, which is unfortunate. I don't see any use of such type of question, but you have to do that. You have to subtract 300 days and come to the date of investment. I'm not discussing that. From March, 31 days subtracted, 28 days, 31 days of January, 31 days of December, 30 days of November. Like this, you'll have to go in the reverse direction and get to 300 days, or from the date day one another 65 days, whatever way you do, you will get to the answer. There also answer can change slightly depending on whether you want to consider the date of investment, you want to ignore the date of investment. Any doubts here? Then total return of investment is add return of MFA, MFB, MFC and divide by 2 plus 5 plus 4. I have not done the other two MF, so that calculation I am not explaining it. 2 plus 5 plus 4. You have to calculate for the first mutual fund return is 16,000 rupees. 16,000 rupees. Second mutual fund will also earn something. Third mutual fund will also earn something. I think second is a loss making one, but you have to calculate the returns and then analyze it. Any doubts here? Assuming past performance will continue, what action should the investor take? Tell me the answer to this. Numbers are there in front of you. Look at the numbers and tell me what action should I take. Sell MFX, MFY, put everything in MFZ and earn 15%. Earn 15%. Put everything in MFZ and earn 15%. Clear? Any doubts on this? I'm going to earn 15% by putting all money in MFZ. Then comes the next surprise element. Will your answer to point 6 change if the MF charges exit load of 5% if the investment is redeemed within 1 year? If the investment is redeemed within 1 year. Now I need certain numbers to do this, so I look at certain numbers from here. 300, 124 and 195. Now I'll explain something here. I've already invested in MFX for 300 days. If I wait for another 65 days, I will get lower return. I agree, but I can say 5% exit load. I will get lower return, but I can save 5% exit load. I have to take a call whether to incur that 5% or get lower return. Another 65 days, if you wait, you will lose 15 minus 9.733. 15% Z can give, but my MF is going to give me only 9.733. So I have to take a call. Should I wait for another 65 days or should I incur 5%? Should I incur 5%? Now write exit load analysis. Exit load analysis. Loss in return by waiting. Loss in return by waiting another 65 days. Loss in return by waiting another 65 days. By waiting another 65 days. If this loss is less than 5%, let's okay to incur that loss and not okay to incur the exit load. Not okay to incur the exit load. What I am saying is I am okay with a lower return because you will unnecessarily put a penalty of 5%. I don't want to pay that penalty of 5%. So this is one. What is the second thing? Incur exit load of 5%. You take a call whether you want lower return or you want 5% exit load. That's your choice. You can decide. If you wait for 65 days, 5% saved. How much I incur, I don't know. I'm going to do the calculation. And if I incur exit load, I earn higher return, but 5% is going. So I am taking a call between the two. Now, what is the loss? Right. Best MF will give me 15. Best MF will give me 15. The best mutual fund is going to give me 15% return. My mutual fund is giving me a return of only 9.733. My mutual fund is giving me a return of only 9.733. 15% is for a year. 9.733 is also for a year. So for 65 days, I will lose into 65 by 365. Now we will take a call which is okay to do. 15 minus 9.733 into 65 by 365. 65 by 365. What is the loss in return? Point. I am not going to incur exit load. I am not going to incur exit load. I will play a waiting game for another 65 days. Another 65 days and lose a return of 0.94%. Lose a return of another 0.94% because we are already at 300 days. Another 65 days, if I wait, that penalty will get removed. That penalty will get removed. So, despite X not performing well, I will redeem X. When will I redeem? After another 65 days. Today, no redemption. Today, no redemption. Redeem it. I am not saying not to redeem it, but wait for another 65 days. Wait for another 65 days. Play a waiting game. Play a waiting game because you can save that 5%. But that story may not work for Y. When you do calculation, you'll understand because Y is already at a negative return. Negative of how much? 11.185. On top of it, it's only 124 days. So you have to wait for another 8 months. 124 days means you have to wait for another 8 months. Would you want to wait or not? Again, I don't know. I'll do the calculation, but high probability I'll not wait. I will not wait for MFY. MFX, what I said, I will play a waiting game. I'll play a waiting game. Why am I waiting? Because it makes sense. It makes sense for wait for another 65 days and save. Save what? Save 5% exit load. I'll come to Y in a minute. No exit load, exit immediately. No exit load, exit immediately. Earlier part when you did, I said exit MFX, exit MFY and put everything in MFZ. Exit load exists. Check proportionate loss in return. Check proportionate loss in return and compare to exit load and decide. Compare to exit load and decide. If the proportionate loss is 0.94, why should I incur exit load of 5%? I will not incur it. Clear? For MFY, let's do MFY now. MFY, we are already only for 124 days. Loss in return for another 241 days. For another 241 days, are you okay to lose money? Loss in return for another 241 days. If another 241 days passes by, exit load is removed. Exit load is removed. Other option is incur exit load of 5%. Incur exit load of 5%. Your choice, okay? Your choice. You can incur exit load of 5% or play a waiting game, but waiting is for a longer period, 241 days. First is 241 is a problem. On top of it, this fund is today at minus 11 point. That is 15 is the best fund. Like last one, 15 is the best one. Minus of minus will become plus in the calculation. Minus of minus will become plus in the calculation. 15 minus of minus 11.185. And you have to wait for 241 days. It will be a huge loss. Minus of minus will become plus. approximately 17%, 17.29%. I don't want to wait and all. Even 65 days, I'm not sure I'll wait here. 241 to impossible because 17% loss is there. 65 days, we may do the calculation, but here I am not going to play a waiting game. No point in waiting here because waiting will only lead to loss. Waiting will lead to loss for us. Clear? Any doubts on this? 17.29%, 5%. Please go ahead and incur 5%. Exit this immediately. First fund also exit is needed, but after 65 days. After 65 days, go ahead and exit. Clear? Any doubts on this? Question 16. On 1/7/2016, Mr. X invested 50,000 at initial offer in mutual fund at a face value of 10 per unit. On 31/3/2017, dividend was paid at 10%. Annualized yield was 120%. 31/3/2018, 20% dividend and capital gain was given. Mr. X redeemed all his 627198 units when his annualized yield was 71.5% over the period of holding. Calculate NAV as on 31/3/2017, 31/3/2018, 31/3/2019, and usual exam question where they give all these data point and then they tell us to calculate return. When I invested, how many units would have been given to me? Participate guys, how many units? When you redeemed, how many units? How is this possible? Dividend reinvestment. So I'll put the table of dividend reinvestment. Somewhere the reinvestment NAV and other things will help me in getting to the answer. I'll put the table of dividend reinvestment. Somewhere I'll get answer using that and some other area, using that as well as some other logic. Let's put the table. Date, dividend percentage, opening units, dividend in rupees, dividend in, sorry, reinvestment NAV, dividend in units, and closing NAV. We will write down those 3 dates on which dividends are paid and try to get to the answer. 3 dates dividends have been paid. First date was 31/3/2017, 10%. 31/3/2018, 20%. Okay, only 2 dates. 10% and 20% dividend got paid. And 20% dividend got paid. Clear? What is the opening units we start with? 5,000. 5,000. What is the face value? 10 into 10%. I don't know this NAV. This is what I'm trying to calculate. I don't know the NAV, but this is what I want. For this purpose, the question has said on 31/3/2017, dividend is 10% and yield means return is 120%. You have earned a return of 120%. So value as on 31/3/2017, value as on 31/3/2017 is equal to 50,000 plus the return earned. 50,000 plus the return earned, and return earned is not 120%. Return earned is 120% into m by 12, into m by 12. This will give me the value, and according to that I will try to get to the answer. Now come down below the table. Value as on 31/3/2017 is equal to investment plus return earned. Investment plus return earned. What is the investment made? 50,000. Return earned is 50,000 into 120% into, from your date of investment, how many months? From your date of investment, how many months? We invested on what date? 1 7 2016. 1 7 2016. So from there on 31 3 2017, I have 9 months. I have 9 months. Question very clearly said calculation consider a year of 12 months. 9 by 12. Value as on 31 3 2017. What's the value you get? Now, this is for your understanding. A very important point. Before dividend is paid, before dividend is paid, it is 5,000 units into 19 rupees. 5,000 units into 19 rupees. Before dividend is paid, 5,000 units into 19 rupees. Once dividend is paid, 19 will become 18 and 5,000 will increase. 5,000 will increase. 19 will become 18 and 5,000 will increase. Why 18? 1 rupee dividend. 1 rupee dividend. So, right, NAV is equal to NAV before dividend. NAV before dividend 95,000 divided by 5,000. 19. This is what they wanted. They wanted the NAV on this date. NAV before dividend. NAV after dividend. 19 minus 1. 18. 19 minus 1. 18. Before dividend and after dividend. Before and after 19 minus 1, 18. Now listen, one important concept. The reinvestment will happen at 18 rupees. The reinvestment will happen. Logic is very simple. Dividend declared, NAV fell, reinvestment happens. It will happen at 18. It will happen at 18. Clear? Any reinvestment will happen at the NAV post the dividend fall. NAV post the dividend fall. Or to put it simply, can you tell me what into 18 will become 95,000? What into 18 will become 95,000? 5,000 into 19 is 95,000. What into 18 will become 95,000? 5,000 point. This should be my closing units. This should be my closing units. So reinvestment NAV 18, right? Dividend in units 5,000 by 18. 5,000 by 18. Sorry, closing units, not closing NAV. Closing units 5,000 plus 277, 5277. 5,000 plus 277, 5277. Any reinvestment will happen at the NAV post the dividend fall. Some students took it as 19 and did the solution. It will go wrong. 19 is wrong. 19 is pre-dividend. Post dividend it will become 18. Dividend paid and then reinvestment happen. And then reinvestment happens. Repeat in the next table. 5277. 5277 into 20%. 10,555.56. How do I proceed beyond this? What should I do here? Sorry? How will you calculate CG? No. Closing units are available. The opening units are available. What is closing is 6271. 6271. Okay, one thing I did a mistake. Sorry, I did not see the 60 paise. Just add this. Dividend is not 2 rupees. Dividend is 2 rupees 60 paise. Dividend is 2 rupees 60 paise. 20% plus a capital gain of 0.6. Capital gain of 0.6. So dividend is not 2 rupees. Dividend is 2 rupees 60 paise. Capital gain is also dividend only. Capital gain is also dividend only. 2 rupees plus another 60 paise. Another 60 paise. So change the dividend number. 2.6. 20 percentage and 60. 20 percentage and 60 paise. I have my closing units. dividend in units will be balancing figure and NAV will become balancing figure. NAV will become balancing figure. The closing unit 6271, that does not have any more dividend after that. So write the closing one 6271.98, 6271.98, dividend in units balancing figure, and reinvestment NAV is balancing figure. 6271 minus 5277.78, and this is 13722.23, 994.20, 13.80, whatever number it comes as 13.8, we'll leave it as 13.8. This is the number after dividend is paid. This is the number after dividend is paid. Pre-dividend extra 2 rupees 60 paise. Extra 2 rupees 60 paise. Any doubts on this? Clear? Then this is the second NAV they wanted. The first NAV they wanted, we have calculated 31/3/2017, 31/3/2018. How do I calculate 31/3/2019? 31/3/2019. Using the same logic of 31/3/2018, investment plus the annualized return is equal to closing value of 6271.98 units. 6271.98 units. Same logic. Value as on 31/3/2019. 31/3/2019 is equal to investment plus return earned. Investment plus return earned from the day zero. From day zero, investment plus return earned. Okay, there is a doubt in live online. Why are we deducting 1 rupees in NAV after dividend? That is what, when I explained the concept, I said NAV will fall by the amount of dividend. NAV will fall by the amount of dividend. Why does it fall? Because either your liabilities increase or your assets go down. Liabilities increase or assets go down. 50,000 plus 50,000 into 71.5%. How many months? From day 1 till this period, how many months? From 1/7/2016 till 31/3/2017 is 9 months. Another 12, another 12. 9 plus 12 plus 12. Get the closing value. One 148,313. This logic I had earlier used when I did that reverse working question, where I said closing value is equal to investment made plus the return earned. Same logic only we are doing here. Some adjustment picked from one question, some adjustment picked from second, some from third, and ICI makes a question. That's what they end up doing. 148,313. This is the value of 6,271.98 units. Closing NAV. Our NAV as on 31/3/2019. 148,313 divided by 6271.98. 23.65. Usual exam question. 23.65. Grip on numbers is very, very critical. Grip on concepts is critical. You can handle any type of question. That's not the difficult part. Without grip on concepts, you'll not be able to do. Any doubts here? Clear? Okay. I'll first explain concept of 17. Tracking of cash inflow and outflow. Now, what is tracking of cash inflow and outflows? They'll give a data saying that mutual fund was started 1 crore rupee, made investment 80 lakh rupee, declared dividend 10 lakh rupee, received income, received interest. If you are able to track it, please do a cash book and calculate the closing cash balance. Calculate the closing cash balance if you are able to track what? The inflow and the outflow. If that tracking is possible, go ahead and calculate what? You will have to calculate the closing cash balance. If it is not possible, record cash as an asset if given, else ignore it, so the question which I'm going to do, they will say on day one this happened, then this inflow came, then this outflow happened, then again this inflow came, again this outflow happened. So we have to calculate closing cash. If this tracking is not possible, if they give you cash balance, write it. If they don't give cash balance, I cannot do randomly any calculation, so I will leave the cash as an asset. So till now, that one question we did where there is no cash in the original situation, rework, we wrote some cash. But here, if tracking is possible, please calculate the closing cash. Tracking not possible, no need to calculate. This is one concept. Second concept is, this got tested in one of the exam question. I invested in shares of companies. As a MF, I invested in shares of companies. I invested in 10,000 shares. On the last day or an earlier date, that company declared dividend. I will get that dividend income. But what they did is, they declared dividend as well as a rights or a bonus issue. Both happened. Dividend also happened. Rights issue or bonus issue also happened by the company in which the MF has invested. In that case, you will get dividend income only on the original share. No dividend income on those right share or the bonus share, because if both have happened at the same time. If there is a lag effect, then depends on assumption or depends on data. So original share applicable and will be received. Why is this needed? To calculate cash balance, I'll need dividend income. That to calculate the cash balance, when I do the problem, you'll understand. Applicable and will be received. Right share, bonus share will not be applicable in case dividend is declared before allotment of bonus or right share. I declare dividend, I declare bonus together. Allotment of bonus share will take time, and dividend would have got paid out in this gap. Our dividend and bonus both happening on the same day also. Still, I will not get dividend income on those extra share. I will not be getting dividend income on those extra share. Clear? Any doubts on this? In case both are happening together. Let's see 17. A mutual fund made an issue of 10 lakh units of 10 each on January 1, 2021. First inflow for the mutual fund. I'll explain in that context only, because I've already explained the concept. First inflow. No entry load was charged. It made following investments. These are outflows. Of the mutual fund. What are the outflow? 25,000 shares, 5% government security, 10% debenture, 8% debenture. During the year, dividend of 8 lakh was received. Inflow in the cash book. Interest on all type of debt instrument was received as and when declared. Inflow in the cash book. On 31st December 2021, equity shares were appreciated by 15%. Listed debentures were quoted at 20% premium. This is to do the NAV calculation on the last day. XYZ Limited on 15th December 2021. On 15th December 2021, in its AGM, declared an interim dividend of 10%. And bonus at the rate of 1:10 with the record date of 28th December. So by 28th December, dividend would have come, bonus would have come, but dividend income only on original share. On the bonus share, no dividend income. Find out the NAV on 31st December, given that the expenses paid during the year is 3 lakh. Find out the NAV if the MF had distributed a dividend of 50 paise per unit. If you are the investor, what is your annualized return which you get? Annualized return is NAV1 minus NAV0 plus D1 plus CG1 divided by NAV0. But NAV1 I will not give you directly. You do the concept and calculate it. How will you calculate? All assets minus liability. In that asset, one of the asset is cash balance. Working note 1, computation of closing cash. Computation of closing cash. Computation of closing cash. From first line, we will keep reading and then keep writing them. The first line says 1 crore inflow. Issue of 10 lakh units at the rate of 10. Issue of 10 lakh units at the rate of 10. Inflow on day 0. 10 lakh into 10. 1 crore. After this inflow came, I made 80 lakh investment. I made 4 lakh investment. I made 5 lakh investment. I made 10 lakh investment. No initial expenses, no entry load, all that they have not given. I made investment of 99 lakh rupees. Next, outflow on day 0. Outflow on day 0. We purchased all of this. 99 lakh gone. We got the money. We invested the money in 4 instruments which they have given. After this, dividend was received. After this, dividend was received. So I'll add the dividend income. I'll add the dividend income. Dividends received. Inflow for us 8 lakh. After this, interest on 5% government security, interest on 10% debenture, interest on 8% debenture, assuming all those are face value. Assuming they are face value, I multiply with these values because interest is on face value, not on the price which I pay. So multiply 5% into 4 lakh plus 10% into 5 lakh plus 8% into 10 lakh and tell me a single amount. 5% into 4, 10% into 5, 8% into 10. All three put together, how much? 5% into 4 lakh, 10% into 5 lakh, and 8% into 10 lakh. All put together, how much inflow? Interest inflow 1 lakh 50,000. Then I have an appreciation of share price. I also have an appreciation of listed debenture. All this in NAV calculation, not of any use as of now. On 15th December, in the AGM, 10% dividend was declared. 10% on face value of 100. Dividend is on face value. So 10 rupee dividend. But that 10 rupee dividend, I will get only on 25,000 share. I'll get only on 25,000 share. By the time I do my valuation, 25,000 would go up by 1 by 10 because there's a bonus declared. There is a bonus declared. So 25,000 shares will go up. But problem for me is this is happening at the same date. So they will not give me dividend income on the bonus share. Dividend income on the bonus share. If it is a rights issue, on the rights also you will not get it. But if there is a rights issue, then in the outflow I'll have to write rights issue payment made. Rights issue payment made. Right. Dividend received. Dividend received. 25,000 shares into 10 rupees. 25,000 shares into 10 rupees. 25,000 equity shares, 10 rupees. Clear? Any doubts in this? Problem is almost over for me. Less one expense is there. Expenses paid. Part 1 of the question says expenses paid 3 lakh. You can copy the number. Closing cash 10 lakh. Closing cash 10 lakh. Problem is over according to me. Both the concept I wanted to teach is done here. Anyway, I'll close out the question. Closing cash is 10 lakh rupee. Any doubts in this? Next, NAV calculation. Particulars calculation amount. Assets. In that first asset is cash. Cash is 10 lakh rupee. First asset is cash. Cash is 10 lakh rupee. Apart from this, I have equity shares. some change has happened. I have government security. If nothing is given, I write the same value. Equity shares, it says equity share appreciated by 15%. So 320 will increase by 15%. 320 will increase by 15%. On 31st December, equity shares were appreciated by 15%. Listed debentures are quoted at 20% premium. Government security, no information, copy paste. Unlisted debentures, copy paste. So 320 will go up. 320 will go up by how much? 3 368, and number of share will also change. Number of share will also change because of the bonus issue. Because of the bonus issue, number of shares will also undergo a change. It will not be 25,000 shares. It is going to be 25,000 plus 10%. 1 is to 10. 1 is to 10. 27,500 into 368 into 368. 1 crore 1,20,000. Next part, government security, copy paste number. Government security, copy paste 4 lakh. Government security, copy paste 4 lakh. Unlisted debentures, copy paste 5 lakh. Listed debentures, some changes there. How much is the appreciation of listed debentures? 20%, 12 lakh. 1 crore 32 lakh 20,000 is the value of all asset. No liability is there. No liability is there. 1 crore 32 lakh 20,000 is the value of all assets. Is the value of all assets. No liability exists. No liability exists. Value of all assets. Tell me the number of units in the MF. 10 lakh. NAV per unit. Clear? Fairly simple calculation. Only thing is two concept which I've already explained in there. One is cash tracking. Second is your income in case there is a bonus issue. The dividend income will not be applicable on the bonus shares. If MF distributes 0.5, when they distribute, I don't know. Let it be any time of distribution. If they had distributed, cash balance would have gone down, total units, total assets would have gone down, NAV would have fallen by 50 paise. In case I declare and I don't pay, then a new liability will come called as dividends payable. So your 13.22, there's a typing mistake here, 13.22 will go down by 0.5, will go down by 0.5 and it will become 12.72. It will become 12.72. And how do I calculate return? NAV1 minus NAV0 plus D1 plus CG1 divided by NAV0, and you'll get the same answer, 32.2%. Whether dividend paid, not paid. Even if you don't pay, you'll get the same answer. Because if you don't pay, 13.22. If you pay, 12.72 and add 50 paise. Add 50 paise. That is why practical world, you have a growth plan, you have a dividend plan. I can invest in growth, I can invest in dividend. For me, NAV will be 13.22. For you, NAV will be how all this tracking is done, that the fund will take care. For us, it's not very critical to know. We will have to just ensure that we have to compute NAV first, and if dividend is there, NAV will fall by the amount of dividend. NAV will fall by the amount of dividend. Clear? Any doubts on this? Okay. Okay. I'm kind of done with major chunk of the MF. Still something is pending. We'll take a break of 1 hour. We'll resume again at 2:30. 2:30 sharp we will resume, and then we'll go until 5:30. I'll take a break now.